Zach's Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. Well, this time around, our stock screener extraordinaire, Kevin Matras, is here to help explain and illustrate using increasing volume to uncover institutional buying.
Illustrate. I'm going to be drawing pictures.
Yes, or have pictures already drawn that you're going to show. So that's an interesting topic. Seems like it's a way to see what stocks are in favor, right? But also what the big gun investors are doing.
Yeah, I think one of the best ways to find stocks that investors are interested in, find stocks that are on the move, is you want to pay attention to what the large investors are doing.
Do they set the tone?
Well, they do. There was a study done, and I believe that they say close to 70% of the volume in stocks comes from institutional investors. Okay. So you definitely want to pay attention to what these people are doing.
Sure.
And the reason why it's so important to pay attention to this, really it's the volume that you're looking at, right? Mm-hmm. Is because the increase in volume is what is showing investor interest. And what's so interesting about the increase in volume is that, first off, the individual investor, they don't have enough firepower to really make a difference, right? You can't really tell if you were to, let's say, buy twice as many stocks as you normally do, so what? Nobody's going to know about it. But when you see institutions go in and they really start making big purchases, that will show up on a chart. That will show up on the histogram of the volume bar at the bottom. These are the things you want to pay attention to. And again, this is how you can truly uncover increased demand for stock.
So that's why other indicators really don't show institutional buying better than increasing volume? It's those large block trades that we see?
Yeah, you can look at the SEC site and you can see every time insiders or institutions are making purchases, you can comb through those reports, but you can get immediacy, right? Immediate gratification by just looking at those volume bars. And the reason why this is so important is because when you take a look at institutions, they are working with tens of millions of dollars, if not hundreds of millions of dollars at a time. And they're taking positions that are so large, they're not doing it all in one fell swoop. They may have to, take 2, 3, 4 weeks, even months to be able to build a position. So one thing that's interesting as a byproduct is that when you do see an institutional investor or these portfolio managers buy a stock, you can be pretty sure that they've done a lot of due diligence to feel pretty good about the outlook. So there is a sense of a commitment, because if it's taking them, let's say, 4 weeks to build that position, man, it's going to take them 4 weeks to get out. So these guys are not day traders. We're not talking about high-frequency trading. We're talking about portfolio managers who are building positions, who are expecting something big to happen to a company. So there is a sense of a commitment when you see them getting into a stock, and this is something that you definitely want to put on your radar screen. Now, again, this doesn't mean that just because institutions are getting in that you should issue your own stock analysis or disregard what's happening to the market, but definitely things you want to be paying attention to, and definitely stocks you want to be putting on your radar screen.
So as a point of reference, just what kind of volume increases are we talking about here?
I've done a lot of testing with this, and I want to see at least 2 weeks of increasing volume and increasing prices. Now, in my testing, I have found that 3 weeks works the best. So, but when you're doing 3 weeks of increasing volume and increasing prices, you are going to be getting a significantly lesser number of stocks. But again, those stocks really are standouts. But minimum of 2 weeks of increasing prices and volume, preferably 3 weeks. That's what I have found to work the best. Now, you'll notice that I precluded 1 week spikes. So one of the reasons why I do that is because anything can happen, right? If you see a big 1 week spike, that could be a one-day event or it could be a very short-term event, and that's not that important. The important thing is being able to see the successive increase in volume because that is what is showing the increase in demand, and that is what you're trying to grab onto. You're trying to ride the coattails of these institutional investors. Now, let me also say too, when you're looking at the increase in volume, it doesn't have to be huge. So you don't need to see, several 100% increases in volume. You just need to see something noticeable. It could be a 20% increase, right, week over week, 30%, 50%, but it doesn't have to be tenfold. In fact, if you see these monstrous increases in volume, oftentimes that will coincide with a turning point. So I definitely want to stay away from that. But if you can see incremental increases, something noticeable, something that you can see increasing on that histogram at the bottom, those are the things you really want to pay attention to.
All right, well, enough talk. Let's lay out the parameters.
Yeah, this is pretty simple. The first thing we're going to focus in on is the increase in price, right? We want volume and price to follow suit. Okay. So I want the current price to be greater than the price from 1 week ago, 1 week ago greater than 2 weeks ago, and 2 weeks ago greater than 3 weeks ago. That is for the price. Okay. The volume is going to be doing the same thing. I want the weekly volume to be greater than the weekly volume from 1 week ago, 1 week ago greater than 2 weeks ago, and 2 weeks ago greater than 3 weeks ago. That is the perfect setup. Then, just for good measure, I got the stocks up here, but for good measure, I will typically want to add in the Zacks rank. The 1s and 2s, of course, are the best, but I'm willing to look at the 3s as well. This at least ensures that there are upward earnings estimate revisions taking place with that stock. I prefer to look at companies that are trading over $5. I just don't like cheap stocks. If you do, that's fine, but a lot of institutional investors won't even pay attention to a $5 stock as well, so just let that be known. And again, institutional investors need to see stocks that have a lot of volume. For me, I just want to see them have at least 100,000 shares of volume. You may have a higher threshold, but just make sure you have to be able to get in and get out easily, and for me, that's the bare minimum.
All right, now let's talk about those stocks that came through the screen.
Yeah, there were a bunch of stocks that came through. And what's interesting is, you see stocks coming through from all different sectors and industries, but oftentimes you'll see a clustering of stocks in the best industries, which again is another fantastic benefit. But here's 5. You've got Genesis Energy, Newell Rubbermaid, Red Robin Gourmet, SAIA, I believe that's the transportation company, and Tesla Motors. A lot of great stocks. They're all enjoying price increases. They're all seeing, nice sequential increases in volume. Definitely companies you want to put on your radar screen.
And is this a screen for all seasons, all markets?
Yeah, it really is.
Most markets?
Yeah. It can be during earnings season, it can be during a lull, it can really be anything. Because institutions, a lot of these institutions try to stay as fully invested as possible. So even when things are rough out there, you always have investors trying to find opportunity. So this is a screen that you can literally run every single day, and I would highly recommend it.
Okay. Did you own any of those stocks that were up there, by the way?
Can't remember. Let me go back. No.
Okay. Thanks for clarifying that. And if you're watching this video in syndication and you want to see a text version of this screen of the week, all you need to do is go over to Zacks.com and you can link to it right off the homepage. When you scroll down that homepage, you see Kevin's picture and the title link is right next to it. And if you want to find out more about the Research Wizard, that is the tool that Kevin uses to achieve all of these screens that he talks about and writes about. Zacks.com/researchwizard is the place to go. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.